Whenever I get a gift, I take it, especially in options. I'm not going to take any more trades today. Strong enough reversal up, so unlikely that we're going to trade far down, but we may also be limited on the upside. And my goal coming into today was a close around the middle of the day. I expected some attempt to duplicate the selling that we've had the past few days into the close. Did I think it was going to be this strong? No, but I did think we were going to get it. Anyway, we got it, and now I'm back to flat, and I'll wait for tomorrow. So what's going on here? A lot of traders did like me. You know, they bought either above 72, below 72. They bought anywhere in here, and a lot of them are happy to get the bounce, and they'll just get out at the at the market, taking profit, thinking that it's unlikely that we will reverse up much more than this. They thought the day would close around the middle, and we get a sharp move up near the middle of the day. And a lot of traders saw 74 and then the quick follow through afterwards as a gift, and they sold out. We still might go up higher, but to me, I got what I thought we would get, and I'll wait for tomorrow. What about shorting? We got two legs up, 72, 74. To me, this is for institutions only. I'm not willing to take any more trades. I still think we'll close around the open of the day. Are we near the open of the day here? Maybe close enough. I think what will happen is that the day will be an inside day with a fairly prominent tail, top and bottom, and a relatively small body, which is what it is right now. Very dangerous, I think, to trade this, selling below 75. Your stop is above 75, but you're going to end up risking 4 points at the end of the day. Do you sell more above 76, scale into shorts? I don't think so. And do you buy above 76, a pullback from the 74 reversal? It's a doji signal bar after a big bear bar. The math is just really hard. It's okay if you're an institution, but if you're an individual trader, it's usually better just to let it go. Big down, big up, big down again at the end of the day, sideways most likely. Obviously a buy, but I think most traders should just wait for tomorrow. Sideways price action into 1245, usually better to wait until tomorrow. Really interesting day. I thought today would be a trading range day. Because of the daily chart, we had 3 big consecutive bear bars closing near their lows. Pretty much anyone who's willing to sell has already sold. A lot of the sellers are bulls who bought over the past 4 months and now have decided that the sell-off is so strong that there will be at least 2 legs down. They don't know if the 2 legs down will be 2 small legs like this or 2 huge legs. Will this become a measuring gap and take us well below 1800? Because of that, the bulls are looking for any bounce to sell. So tomorrow, if we trade above today's high, the traders will look to sell above today's high, even if it reverses up strongly. Bears see today as an inside bar, a pullback from the 3-day bear breakout, and therefore a sell signal below today's low. But we've got consecutive sell climaxes down through support area, the August low, and we have a weak-looking signal bar for the bears. So to me, that's a bad-looking low one, short, breakout pullback short, and there probably are buyers below today's low. So going into tomorrow, probably buyers below today's low, probably sellers somewhere above today's high, but the stop is all the way up here. So if traders are selling today's high sometime tomorrow, they need a really wide stop. Otherwise, you simply wait for the 5-minute chart and look for a reversal down after the market goes above today's high. You can see we're getting all the way back to the open of the day. Right? Did not look likely, but that's what the market is doing. I've been saying all day long, doji day, doji day, doji day. And it looks like that's what the day will end up being. Weekly chart, we still have several days left of the week, so it's really not meaningful. Right? We have a bear breakout. We might get a reversal back up. Also, you've got to remember October is actually a very bullish month. Right? And you say, well, what about the crash in 29? What about the crash in 87? Well, yes, you very often get, not very often, you sometimes get big sell-offs in October, but they usually end sometime in the middle of the month. And that often leads to the rally into the end of the year. You often hear of a Christmas rally or an end-of-the-year rally. You often hear that the most bullish time of the year is October through April, right? So we are getting into that window. That does not mean middle of October we go straight up to the end of April. You know, sell in May, go away. It does mean that there's a seasonal upside tendency beginning in the middle of October after whatever sell-off we get. The sell-off that we've had, I think, is not over. I think that we will get a second leg down from that big bear breakout over the past few days. Because of the consecutive sell climaxes on the 60-minute chart and the 3 pushes down, I thought the odds were that we would get at least 2 legs up and at least 20 bars of a rally today, which we did. In fact, we got almost exactly 20 bars up on the rally, and we did get 2 legs up. The second leg up subdivided into 4 or 5 legs, and basically was a low 4 short at the high of the day. For stop entries, let me just go through the day. Buying above 1, it's a possible V-bottom, but V-bottoms virtually never develop. So anytime you see a potential V-bottom, you have to assume that it will not go up very far before it pulls back and tries to form a major trend reversal, which it did at bar 7. Bar 3, it's possible it could be duplicating yesterday, an opening reversal, a rally to resistance, moving average, and that prior low that I talked about, and then a reversal down for the high of the day. But again, 3 consecutive sell climaxes, 60-minute chart. And I think the odds are that today will be a trading range day, maybe an inside day, probably closing around the middle of the day. That is the single most likely thing. You got bull trend day, bear trend day, big trend, small trend, right? Of all the possibilities, I think the most likely is that we will have a pause day after the sell climaxes. We'll get 2 legs up and we'll close around the middle of the day. For the bears, opening reversal below 3, 3 consecutive bull bars always in long, but as I said, I would not buy it because of the possibility that we trade down pretty far before the buyers come back in. 4, closing on its low, more down. 5, more down. 6, we might simply be testing that high, the 81 high. We've got a big tail there. I think you have to be aware of the possibility that this could be an opening reversal up after an opening reversal down and a higher low major trend reversal. 7, a good-looking bull bar, but too big. So now we got big down yesterday, gap up, big up today, big down here, big up here. It looks like we're going sideways. If you buy above 7, you're doing it for a swing. You need to stop below 7, not a stop below 9. Otherwise, you wait either for a second entry buy or for a bull breakout. So it's a higher low major trend reversal. 9, another 3 consecutive bull bars, like bar 3. You usually don't get that in bear trends. So something is not right for the bears. And I think we will try to form an early low of the day and rally for about 20 bars. Can you sell the 10 close, 11 close? A lot of the traders who sold the 11 close tried to scale in higher, but look what happened. The 13 low did not even get back to their original entry price. The bears were so worried that this was a possible low of the day that they tried to get out, break even on their entire position instead of with a profit on their second entry and break even on their first entry. They bought back early on the 13 low.